bye before we bye. Carvana. Carvana jumped around 22% yesterday. Volume pouring in around 33.3 million shares trading hands, well above the 20.5 million average. No major news. It was just the memers. So, Garrett, do you think Carvana is the same class as meme stocks like AMC and GME now?
Yeah, they are, and they're probably going to go down to $1. But I will say this. Any private equity company that's smart enough to figure out a way to take over Carvana, buy it, rename it, rebrand it, and just roll with that business model is going to make a lot of money. It's actually a very smart business model when you don't have a lot of real estate. I was driving through Chicago in Old Town the other day, and there were all these BMW dealerships, and I was trying to do the real estate in my head of just how bad of an investment the real estate component is for auto. I really like Carvana's business model. I think it was smart. I just think it was a very poorly run company. They were given a ton of money in an environment where capital didn't matter. They overexpanded. They didn't do it the right way. If I wasn't doing this, I would try to figure out how to make that business model work. I think Americans are lazy, and I think bringing cars to them at $20,000, $30,000, $40,000 vehicles is a hell of a business model with very little overhead.
All right, so we know what Garrett's going to be doing in 2023. New year, new Garrett.
Going up, CEO. Driving cars, dropping off vans. I am not kidding.
All right.
I think it's brilliant.
We're going to 2024. All right.
I want a Bodak yellow Nissan. Make it happen.
There you go. Write it down. I'll be over there in about 20 minutes. I'm driving. Okay, there we go. Drop it off, test drive it. Let me know.
Let me know if anybody's actually used Carvana, because I am curious, because I got to get a car for my daughter. I'm very skeptical of that whole thing.
I use it to make money, shorting it.
But this is the thing, Kenny. Everybody's skeptical of things until they use it, right? Like we used to say, don't get into other people's cars, and now that's all we do.
We did used to say that?
Yeah, never get in a stranger's car, and then Uber became the business model for that.
Stranger danger!
True. All right, let's go.
All right, let's go. Shaw with the urge to trade these stocks, or the surge bringing the stock back to life. Will you be looking on a possible short play on these zombie stocks, or we're just leaving it up for Kenny?
I leave those day trading types of moves, which are fantastic, to Kenny, because that's the way he plays them. I don't play them that way. As far as Carvana goes, piece of junk. I think the company should probably head down to $1, or I think you're going to have to BK. The only interest the private equity would have is if they BK, restructure their debt. That would be the only reason that I think any private equity company would want to come in, or investors would come in. $8+ billion in debt. On a beta basis, and they lose about almost $1 billion a year. It's just a mess of a company. And as far as personal experience, not me, but I have a couple of friends. One of them in particular told me, yes, great. They dropped the car off. Great. They came and wanted to look at my car because I wanted to sell it to them. He said they paid overbook for the car, didn't even look at it, walked around it once and wrote him a check. He said it was the easiest thing he ever did. He told them there was problems with the car. They said, we don't care. So now they're going to have to fix that car and sell it, or if they don't fix it properly, it's going to come back to them. That's part of the business problem with Carvana. So no, this is not an opportunity for anyone to buy on this bounce. 80% plus short of float. Of course, you're going to have pop days.
Yeah, and that's Shah speaking directly to the problem with the business model. A company that's trying to grow too quickly, they don't care. They're not worried about the quality of the vehicle. They're just trying to get the transaction. They're trying to get their user base up. So if you actually were able to buy this company for a hot dog, partner with local manufacturers and dealerships, you might actually have a good business model. But that has not been the business case of the last 12 years in the United States. Everybody is focused on user growth instead of focusing on quality, and that's going to be the key lesson that they're going to talk about in Harvard Business School over the next decade when they do an autopsy of this company.
Oh man! Well, now I'm gonna layer on the Garrett conspiracy theories that Garrett was MIA because he was at the Carvana headquarters. Just throwing that out there.
I want Shaw's paintings. Shaw's got better artwork than me. He's got way better artwork than me.
I think Shaw, you know what he should do? He should just get a minimalist painting of Lindsay Lohan's mugshot, and then that will just make it. Wouldn't that be nice?
It solves
That's
all
an
my
interesting
Christmas
thought.
problems
I'm
next
going to
year.
look at that one. That's an idea. I like it.
All right. Okay, cool. Well,
Ken,
I got
Shah, is there any hope for a company like this? Is there any, what is the lesson of, you look at companies like AMC, you look at companies like Carvana, because if these companies, if there's other companies in the space that are startups or they're legacy companies that are looking to expand into this, do you think that there's any viability to any of these business models moving forward?
Yeah, once they're stripped of the irregularities, of the problems, yes, and the debt gets restructured or basically written off, yeah, then there's
Right.
something to work with to start over again. There's been a lot of case history over the years, decades, where that is successful. But in terms of Carvana, you said it, the money is cheap, and when you have cheap capital, access to cheap capital. There's nothing you can't do because investors who are investing in you know you're just parlaying. It's just a matter of economics. You're going to parlay whatever you've got with cheaper capital, build it up, and the market thinks it's worth more. So your exit strategy is to do an IPO and then sell the stock as it goes up. This is the game. This has been the game. You know that.
Mm-hmm.
And that game now, with interest rates rising, may be coming to an end. I can only hope because then we get proper allocation of capital if we get higher interest rates. But we're a long way off from that.